An unsecured loan involves borrowing a few hundred or £1,000 from a bank, lender, or financial institution. However, you do not need to put down anything as collateral, such as a car, home, or jewellery, or watch, or art, in order to be eligible. So, if you are unable to meet the repayments, you do not risk your valuable property or items being repossessed or taken away by the bank or lender. Some examples of unsecured loans include payday loans. You simply apply and you are eligible based on your credit score, affordability, and other factors. Home improvement loans, provided that you don't have to put down your home as collateral. Emergency loans, wedding loans, personal loans, peer-to-peer lending, and of course credit cards. In our guide, we explain the difference between unsecured loans and secured loans, whereas a secured loan means that you have to secure the loan on something physical, such as a car, home, watch, art, or jewellery. And for this gives the lender some security that if you aren't able to repay your loan, they will be able to recover the cost of what they've actually lent out to you by selling off your art or your jewellery, your home, your watch, and so forth. We look at the rates and how much is typically charged for an unsecured loan, which might be a bit more expensive because, of course, the lender has less collateral, less security. Secured loans, the rates should be a lot less, simply because they have some form of security, and it means that one should be able to borrow more and hopefully for longer. But of course, this does depend on your credit rating and affordability, where we explain that typically if you have a better credit score, you should actually have availability to the lowest rates and hopefully be able to borrow more and for longer. We also explain how you can get an unsecured loan with bad credit. It means that you may actually be charged higher rates, you may be limited in how much you can borrow, or for a credit card you have a limited credit limit, or perhaps you could have a guarantor who can give you that added security by guaranteeing your loan. We discuss the criteria, which varies from lender to lender, but for unsecured loans is usually you need to be over 18, living in the UK, in employment, have a working debit account, and a good credit score obviously helps. If you cannot repay, the biggest consequence is that it may negatively impact your credit score, which does have bad implications. It makes it harder to get loans or other finance in the future, and actually can make it more expensive. There are also added fees. You may be charged default fees, or there may be extra daily interest added on because you cannot repay. So, have a good read of our guide, and if you have any questions, simply pop us an email.